Roblox isn't just a game, it's a massive online universe, a digital playground where imagination knows no bounds. For millions of kids and teens around the world, Roblox is the place to hang out, build, and explore. It's a platform where anyone can become a creator, designing their own worlds, games, and experiences, then sharing them with friends and strangers alike. Every day, millions log in to create, share, and play, forming a vibrant community that stretches across continents and cultures. Roblox isn't just about playing games, it's about connecting, collaborating, and expressing creativity in ways that were unimaginable just a decade ago. It's become a cultural phenomenon, shaping how young people interact, learn, and play online. For many, Roblox is their first introduction to coding, digital design, and entrepreneurship, as players can even earn real money from their creations. With its explosive popularity, Roblox made headlines when it went public, opening the doors for anyone to buy a piece of the company through its stock. The move was seen as a bold step, signaling Roblox's arrival as a major player in both tech and entertainment. Investors were initially thrilled, seeing endless growth potential in Roblox's unique platform and its massive loyal user base. The company's vision of a metaverse, a shared virtual space for work, play, and socializing, captured imaginations and drove excitement on Wall Street. But the stock market is unpredictable, and popularity doesn't always translate into profits. As the initial excitement faded, investors began to scrutinize Roblox's financials more closely, looking for signs of sustainable growth and profitability. Recently, Roblox's stock price has been falling, even as the broader market climbs. Headlines have shifted from celebration to concern, and the mood among investors has grown cautious. This has left investors confused and concerned, wondering if the company's best days are already behind it, or if this is just a temporary setback. Why is Roblox struggling while other stocks soar? What's causing this disconnect between the platform's popularity and its performance on Wall Street? The answer lies in the company's financials and Wall Street's expectations. Investors are looking for clear signs of profitability, strong revenue growth, and a path to long-term success. In the next scenes, we'll break down the numbers, explore what's driving investor anxiety, and explain what's really happening with Roblox on Wall Street. We'll look at the challenges the company faces, from rising costs to fierce competition, and what it needs to do to win back investor confidence. We'll look at the data, hear from the experts, and uncover the story behind the headlines. Whether you're a gamer, a parent, or an investor, understanding Roblox's journey is key to seeing where the digital playground and its stock might go next. If you're wondering why Roblox's stock is sinking, you're in the right place. Let's dive in and uncover the real story behind the numbers. On January 6, 2026, Roblox's stock, ticker symbol RBLX, suffered a dramatic drop, plunging over 6% in a single trading day. For investors and market watchers, this wasn't just a minor blip, it was a sharp, attention-grabbing move that stood out on the financial landscape. What makes this even more remarkable is that the rest of the market was actually having a great day. The S&P 500, Dow, and Nasdaq, all the major indexes, were solidly in the green, posting healthy gains and reflecting broad investor optimism. Picture it like a fleet of boats all rising together on a high tide, except for one, labeled Roblox, which is suddenly taking on water and sinking fast. While most companies were buoyed by positive sentiment, Roblox was left behind, struggling against the current. This isn't your typical market-wide sell-off where everyone is scrambling for the exits. Instead, it's a very specific problem, one that's laser-focused on Roblox itself. The rest of the market is thriving, but Roblox is facing a unique set of challenges. When you see a stock falling while nearly everything else is rising, it's a clear signal that investors are reacting to something unique about that company, something that sets it apart from the broader market trend. Investors are making a conscious choice. They're selling off Roblox shares, even as they eagerly buy into other companies that are performing well. This kind of selective selling tells us there's a specific concern or risk that's weighing on Roblox. This sharp divergence is a warning sign. It signals that Wall Street sees potential trouble ahead for Roblox. Maybe it's about earnings, user growth, or something deeper. Whatever the reason, the market is clearly worried. So, what's driving this sudden wave of negative sentiment? Is it a disappointing earnings report, a change in user engagement, or perhaps concerns about the company's future strategy? The big question is whether this is just a one-off event, a temporary setback, or if it's a sign of deeper, more persistent issues lurking beneath the surface for Roblox. Understanding this disconnect between Roblox and the rest of the market is crucial. It's the key to making sense of why Roblox is struggling while its peers are thriving, and what it might mean for the company's future. To get to the bottom of this, we need to dig into the numbers, examine the latest reports, and look for clues that might explain what's really going on behind the scenes. The answers might surprise you, and could reveal important lessons for anyone watching the ever-changing world of tech stocks. Zooming out, Roblox's stock has dropped 17% over the past month. Meanwhile, the S&P 500 and Roblox's own sector, consumer discretionary, both posted gains. This isn't just a bad day, it's a sustained sell-off. Investors are consistently losing confidence in Roblox, even as similar companies hold steady or rise. The persistent decline suggests deeper concerns about Roblox's business, not just a reaction to a single headline. Something fundamental is making investors rethink the company's value. Looking at the full year, the picture gets even more complicated. Analysts expect Roblox to report a loss of $1.59 per share. Worse than last year, losses are widening, not shrinking, which shakes investor confidence. Revenue is projected to be flat at $6.64 billion, signaling that growth has stalled. For a company once valued for explosive expansion, flat sales and growing losses are a red flag. Investors want to see a path to profitability, not stagnation. The excitement around Roblox was built on rapid growth. Now, with losses mounting and revenue stalling, Wall Street is rethinking its optimism. That's a big reason the stock is under pressure. All eyes are now on Roblox's upcoming earnings report. Analysts expect a loss of 50 cents per share for the quarter, a staggering 51% worse than last year. Instead of moving toward profitability, Roblox's losses are accelerating. This forecast is fueling anxiety and driving investors to sell before the numbers are even released. The anticipation of bad news is often enough to push a stock lower. These are just projections, but Wall Street trades on expectations. The negative outlook has cast a shadow over Roblox's stock. Investors are bracing for disappointment. The pressure is on for Roblox to prove it can turn things around. Until then, skepticism rules. Here's the twist. While earnings look grim, revenue projections are soaring. It's a classic case of a company growing fast, but not yet turning that growth into profit. On paper, Roblox is bringing in more money than ever before, but the story beneath the surface is far more complicated. Analysts expect Roblox to post $2.07 billion in quarterly revenue, up over 50% from last year. That's a staggering jump, especially in a tech landscape where many companies are struggling to maintain momentum. This kind of growth is rare, and it's catching the attention of both Wall Street and Silicon Valley. The platform is still wildly popular and monetizing its user base better than ever. Millions of users are spending money on in-game items, and developers are flocking to the platform to create new experiences. Roblox's ability to keep users engaged and spending has become the envy of the industry. Its appeal spans generations, from kids building virtual worlds to adults hosting events and even businesses experimenting with digital storefronts. This broad reach is fueling its revenue engine, but despite booming sales, losses are growing even faster. The company's expenses are outpacing its impressive revenue, raising eyebrows among financial experts. This is the paradox. Roblox is making more money, but spending even more. Every dollar earned seems to be matched or even exceeded by a dollar spent. Heavy investments in growth, like hiring, infrastructure, and marketing, are eating up profits. Roblox is betting big on its future, pouring resources into expanding its workforce, upgrading technology, and reaching new audiences. The hope is that these investments will pay off down the line, but for now, they're a major drag on the bottom line. Investors are torn. Should they focus on explosive revenue or worry about mounting losses? Some see a company on the verge of greatness, while others fear it's burning through cash too quickly. Right now, Wall Street is more concerned about the bottom line. Profitability is king, and until Roblox can show a clear path to sustainable earnings, skepticism will linger. The result? A stock caught between optimism and fear. Every earnings report sends the share price swinging as investors react to the latest numbers and guidance. Roblox's future depends on whether it can turn revenue growth into real profits. Until then, uncertainty reigns, and the market will keep watching for signs of a turnaround. To help investors cut through the noise, research firms use rating systems like the Zacks rank. Zacks rates stocks from 1, strong buy, to 5, strong sell, based on analyst earnings estimates. Roblox currently holds a Zacks rank of 3, hold. That means analysts see it performing about the same as the market, neither a big winner nor a big loser. Despite a slight uptick in earnings estimates, concerns about losses and flat revenue keep the rating neutral. The hold rating sums up the dilemma. Roblox has momentum but also major headwinds. Investors are waiting for a clear signal before making their next move. For now, caution prevails. Roblox's struggles aren't happening in a vacuum. The entire gaming industry is facing headwinds, ranked in the bottom third by Zacks for earnings outlook. Slowing consumer spending, rising competition, and higher costs are squeezing profits across the sector. This weak industry ranking adds another layer of difficulty for Roblox. Even if Roblox fixes its own problems, it's still swimming against a tough current. Investors are wary of the whole sector, not just Roblox. That makes it even harder for the stock to rebound. The industry's struggles amplify Roblox's own challenges. It's a tough environment for any gaming company right now. Roblox's story is a tug-of-war between explosive growth and mounting losses. The platform is thriving, but the financials are troubling. Wall Street is split. Some see a future tech giant. Others see a risky bet. The Zacks hold rating captures this uncertainty perfectly. For short-term traders, the risks may outweigh the rewards. Long-term believers might see opportunity in the chaos. There's no easy answer, only tough choices. Roblox's fate depends on turning growth into profits. Until then, expect volatility and debate. The next chapter will be written by the numbers.